Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is June 25th, 2018, and I thought I'd take a look at the S&P 500, the ETF being SPY, just because the markets as a whole really just tanked today. Now, according to our stuff, despite the huge sell-off that we had here in the S&P 500, the short, intermediate, and long term, they just haven't probably caught up yet, are all still pointing to the upside. The technical rating is still pointing to the upside, and there's nothing that's showing right through here as far as any alerts, but there is something that did pop up here in the S&P 500, a dazed low, and that is a signal that usually is one of the first ones you'll see as an opportunity for the market to reverse. So what I wanted to show was first, let's take a look at it on a screen so you can see what it actually looks like. Here is this little dot on the S&P 500. This is daily bars. You can see that the market turning over, selling off, and then abruptly sold off here today. And we had one of these dazed low type signals. And so typically when we get these things, I'm going to flip back to the website. If you come down to, and this is readily available, you just come to signals, the performance for the pro alert, you come down to the dazed low, you get a little chart here for all of the different markets. You can see the performance, because it's kind of a buy on dip type mentality, that you can see that the performance over the last 6 years or so has been quite good, specifically for the S&P 500. The only one that's been a little bit better is copper. Russell 2000, obviously virtually the same market, not really a lot of diversification there. Obviously a separate market, but nonetheless it's up on the upper echelon here as a really good type signal when the market does one of these buy on dip type scenarios. So let's try to get a feel for what's taking place here in the long term, and then we'll get an idea as to what's really going on here. Let me just go back a couple of charts here. Here is the 10-year chart, or actually this is the 5-year chart for the S&P 500, and you see that in general we're not there yet, but we're approaching there. You can see this little sell-off here. There's typically a pretty good bounce here in the 5-year charts, and when it comes to the 10-year charts, it's we're at that low period right now, and that there's a bias to the upside. So the buy on dip is not necessarily far-fetched here when it comes to the seasonal tendencies to the market. Now, the other thing I want to point out here is a couple of tools we actually have on the website that I would love for people to really pay attention to. I'm going to show you where you can find it. You come to signals. The first one is daily support resistance levels. This is different from targets. This is an actual level, and they're not perfect, but when you do have, and you have to cursor down here or scroll down to the S&P 500, what you'll get is a target for the day. And what I want to point out, even though that the low was in the S&P 500 was 2,700, so 10 points below this, when you start the day off and the market, whatever the market is, whether it's cotton or the S&P 500, when you have a day that looks like it's going to be very volatile and there's a big surge going on, this is where you'd want to come to really see what is the potential for the market. And what this will do is it'll give you at least an extreme, that's what the X stands for, support, extreme, resistance. Now obviously what we're doing is we're giving you both the plus and the minus side to this this formula, but in this particular case what you can see is that if the market were to really sell off as it did today, legitimately, how far could it run? So I'm going to give you two targets here. First one is this extreme support level to the market, and that's where you'd want to really get an idea as to really what kind of risk is out there. The other one is the targets, and you find this by going to in this case signals. You come down to market targets, you'd find the S&P 500, and
what you want to look at here is when the market starts to sell off. Here is the 2706 level to the market. Had a strength of 96. We had three different counts or conditions that were really occurring in that particular case. That if the market's selling off immediately, well, as it's actually taking place, and you recognize that a big day is occurring, that's where you come to that first chart that I showed you, the 210 or the 2710 level. The refinement to this is this level right through here. And what you can see is that there was a big gap here between this threshold, this support level to the market, and this level. So kind of similar what happened today is that it broke through that support level. There was a gap, nothing really holding it, and the analogy I like to use is like a warm knife through butter. Just going to slice it very, very easily, and when you come through that level, what is the target? Now the market was really a runaround, so going down to 2700, a key level, that really would be the support, but the refinement to the support would be the 2706 level. And as I mentioned, when you start looking for potential, where could the market be heading, that's where this 2710 level comes into place. So it's not necessarily a big surprise. Obviously we wish we could have been full bore short the market. I'm not questioning the systems or the analyses or anything of that nature. What I'm trying to point out is when you have a market that is going into this type of a sell-off, what would be an extreme support to the market or extreme resistance to the market? And these are the types of conditions, these types of extreme support and resistance targets are important. Then what you would do is, oh look, there's a big gap here. It should come as little surprise or a great opportunity is probably the better way to express this, that if we break through these levels, there's really nothing holding it, that the major support should have been the 2706 level. And anytime you start getting into kind of key thresholds, specifically in the equity markets and in the S&P, well, then you kind of revert back to the 2700 level. But it did come down. It found the 2700. Started to break back above that. Today I was able to, at least while this was occurring, point out the market has probably come to the net result of what it was going to do. And what I'll do is say this, that for those of you that don't follow me on Twitter, but you're looking for information, things that will really give you an idea as to what's taking place, you just simply come to Signals, and this is readily available to everybody, Market Analysis. And then if you're interested, what you can do is you can kind of cursor through this, and you can really get a feel for some of the things, whether it's important things or just a song that was important to me in my youth or something of that nature. But what I'll do is I'll point out that certain conditions are taking place. So I mentioned the 2705, which really should have been 2706, but you get the idea. And I was pointing out that the S&P was coming down to a logical spot where it should rest. And I was saying, okay, here is my number 2705. Another number is 2710. Well, you can see where those numbers were really coming from, and if I'm able, I'll post the chart if at all possible. But the point is, when these conditions take place, all you need to do is really, for the most part, just simply see what's taking place. Just come to Market Analysis, and you'll see that if I see something taking place, I'll mention it, and I'll typically have a link to the website that will say this is why I believe that, so that we're not just randomly talking about certain things. And from that standpoint, it puts us in a position where we can get a feel for what's potential here. So where things stand right now, if I can find market signals, you'll find that the S&P 500 systems are actually flat the market. So this is a potential buy on dip. The systems, despite the fact that the market sold off abruptly today, I pointed out the support and resistance levels, but I also show some some bullish trends to the market, and some of these things are kind of counter to what is taking place with the market. And that being the case, our systems are flat. They haven't taken the initiative to buy on the dip as of yet, but I would encourage you to watch this condition to see as whether there's an opportunity for some of these systems to actually start to go long the market. But during the course of the day, if you had been long the market or looking for an opportunity, that's where those different thresholds, the targets and the support and resistance levels that I've been referring to, these are important so that you at least have an idea as to where the market could be going to. So for the discretionary traders, you can take action. For those that prefer a little more consistency, looking for see the bottom, react to the bottom, allow the systems to see these conditions so they can react, well, we're at that in-between stage where we had the support and resistance. And if I can pull up the market here, you'll see that we're sitting on the 50-day moving average. So that that 2010 level and that 2005 level are still very, very important. Here's where the 2005 level is coming from. If you come straight across, it was basically hitting that low. But if we're not able to stay above or at least hold on to the 50-day moving average, which is coincidentally where the market broke through and then found support, then our next level is going to be the 200-day moving average. And most likely our next level, if we should break that, is going to be this lower threshold. Point being, watch the systems, look for these support and resistance levels so you have an idea on extreme market days what to look for. Watch the market targets to see as to whether or not there's an opportunity for a gap. And then obviously what you want to be doing is looking at these different alerts that are going to be popping up here. And the dazed one, it's telling us that the market could find legitimate support here. I mentioned the Pro Alert and the fact that it was number 2 on the list when it comes to its performance. So I would wait to see what's going to take place with the systems, whether or not they're going to be able to react to the market and go long, or if the market has more downside potential. I think I pointed out enough things that we've probably found some of that support, but I always adhere to what the systems tell us to do. And in this particular case, they're flat and they've got all the potential in the world. We don't necessarily have to buy the bottom, as I mentioned before. What we want to do is see the bottom, be safe, and then react to it. And that could be the stage that we're in right now. So watch the S&P systems, and hopefully there's a legitimate opportunity to go along the market. Thanks for watching, and we will take a look at another market tomorrow. Bye-bye.